Take us through some of your expectations for the trading week ahead, where, as I mentioned earlier, we know players are anticipating numbers out of the banking sector in particular.
It's going to be a very interesting week, given that we're actually getting into a new quarter in terms of results, in terms of how the companies have been performing the last 2 quarters. And basically, we're looking at, fundamentals that are actually definitely going to inspire and affect how the market direction is going to be. And this quarter is actually going to define the definite path that the market will take, because I believe once we sail through this quarter, then the market will be on a bullish recovery until the end of the year.
Well, you talk of sailing through the next quarter, but this is in a context where we've heard that Kenya's economy slowed to 4.4% in the first quarter of this year, compared to the 5.6% registered in the same period last year. Has this latest bit of economic data raised any concern to those projections at all?
Definitely, there are concerns to the difference in the results given. But what I know is a lot has happened this year in terms of actually supporting the economy. The economy's principal pillars. We're seeing the Ministry of Finance actually coming in with comprehensive reforms as far as stimulating the economy is concerned. The release of the stimulus package and ensuring that it's actually, issues of red tape and bureaucracy are removed to make sure that the key economic pillars like the agricultural sector, the finance sector, and the infrastructure sector are actually boosted. And then also we're looking at, given reforms that are the Ministry of Finance that are actually outlined in the last budget. And, with the 1 trillion budget that many Kenyans are looking forward to being as, one supporting wealth creation, one supporting the small businesses, one that is actually, respects the wishes of the consumer, things are actually bound to change. In as much as there's a difference of analysis, I believe this quarter and how things are going to be, especially when you look at the results coming out from the banking sector, you realize that especially the economy has actually grown tremendously.
Well, let's just look at one of the sectors that contributes heftily to GDP growth in the agri space. We've had the regulator Tea Board of Kenya having unveiled a mark of origin for Kenyan tea and African exporters of agricultural commodities, saying that branding of their output will help earn more from international markets. What is the market made of this move, and how is it viewing potential earnings in this space moving forward?
The tea industry has actually been, it's been doing very well. Farmers have really been benefiting a lot from international prices. We've seen growth of policy, we've seen diversity in the sector. But as I say, what many companies are doing, especially in the tea industry, is coming up with ways to actually enhance their products and be able to take advantage of the international prices and be able to compete well with other countries like Pakistan. And what I know is branding is a key issue to any growth of any product or service. And I believe if they can get branding properly, then Kenyan market, the Kenyan tea industry will actually benefit more from the international high prices of tea.
Well, this is especially important where we've been hearing that it's strong brands that are set to leverage off the East African community trading bloc as well. Where we're always talking, though, about tea players being undervalued, extremely undervalued. I mean, to what extent do you see these strides, along with the cheap prices on offer, shifting investment and the way investors play within this space?
What I believe is most of the companies are clearly undervalued, especially at the markets. But what I know with the birth of the East African community, 1st of July, and the way forward, what many people, especially investors, actually looking at is the framework under which all this is actually going to be played in. And I believe a lot of our strategy is actually, there's a lot of strategy shift in growth, in client management, in business acquisition across the region. And what I know is for the first time in a long time in our markets, whether in Kenya or the East African, many share prices are actually going to be now based on fundamental growth and technical analysis, and not just mere current affairs or news, because right now it's going to just take more than what you hear in the news to actually make an investment decision. So what I know is the expansion of the economic hub to 5 countries is actually going to play a key role in terms of investment decisions.
One of the key problems is liquidity on these stocks, though. I mean, because despite this optimism that lies about, investors are still reluctant to place money where it's going to be tied up. They're not going to be able to pull out if things turn around and go a bit pear-shaped, especially ahead of the August the 4th referendum in the country. Do you see this being a particular challenge for these players?
I believe the one problem that our markets, especially the Kenyan market, is actually going to face is the aspect of the political referendum issue. And this is actually going to make many investors hold back on how they're going to make the investment decisions. However, what I know is with a lot of, the aspect of liquidity comes into mind. But what I know is with now East Africans being able to trade on any platform, money is actually going to be available. And what I know is if there's a lot of demand for particular shares, like I know Safaricom, Equity, Kenya Commercial Bank, these are stocks that whose liquidity at the market is actually available. And a company like Safaricom needs to be bought more so that consolidation of the stocks can actually happen, so that the key fundamentals for it can see through a position of the price. So at the end of the day, apart from politics, we're going to see more consolidation of the stock prices through appreciation and complete marginal takeover by key investors.